2, baby. It's just 2 minutes. Your 2-minute tax tip starts now.
All right. Let's get into this video. Oh, if you're trading cryptocurrency, you're definitely going to want to watch this video. Listen, I know I'm not Carlos Matos of... But I tell you what, we're going to break down cryptocurrency taxes in this video like it's the most amazing thing in the world. So beautiful. Mwah, mwah, mwah. So if you're a cryptocurrency trader or you're mining cryptocurrencies like Bitcoin, altcoin, Ethereum, unicorns, leprechauns, shroot bucks.
Oh, that's funny. Michael!
And you want to know how Trump's tax reform affected the cryptocurrency community? Then you'll want to watch this video, but we only have 2 minutes, so let's dive right in. Okay, let's get into the basics here. Recently, the IRS won John Doe summons case versus Coinbase, which means the gig is up for cryptocurrency traders. So if you're a cryptocurrency trader, Coinbase is now coughing up information on all individuals with $20,000 or more in cryptocurrency trading transactions so that the IRS can go after taxable events. What this means is most likely the IRS will start to do audits on individuals that they find information through Coinbase. And some of the details in the IRS audit world is this. So assessment is going to go back 3 years, which means that they have up to 3 years to assess the situation. 6 years for substantial omission. So if you're a cryptocurrency trader and you've omitted that you've made money through cryptocurrency, they can go back 6 years, and then collection 10 years after assessment. Okay, so what's the latest from the tax reform in the cryptocurrency community? Under the new Trump tax reform, they define cryptocurrency as property, not real property, and neither as currency. So what this means is capital gains rates now apply, the short-term and long-term capital gains rates. If you're a cryptocurrency trader and you buy and HODL, then taxes will be deferred for you, but everything else like trading, mining, purchasing goods and services, donations, payroll, using cryptocurrency will most likely be a taxable event. So what about like-kind exchanges? So crypto traders trade often with the hopes of claiming like-kind exchanges with their cryptocurrency in hopes to defer taxes. But under the new tax reform, they absolutely define what this is. So the tax bill clarified that like-kind exchanges only applies to real property, and cryptocurrency in the tax reform is defined as regular property, not real property, which means crypto traders can't use like-kind exchanges as a reason to tax defer. It also means crypto-to-crypto trades are now taxable. So if you're using services like Shapeshift, Changely, EtherDelta, things of this sort, any transactions that are going on in there will most likely be a taxable event underneath the Trump tax reform, and you will not be able to utilize like-kind exchanges. So capital gains and losses will have to be calculated every time you trade coins. So if you're going from Bitcoin to altcoin or for Ethereum to altcoin, you're going to have to keep track of every single transaction that occurs when you're doing that. Okay, thank you guys for watching. Hopefully that answered all your questions about cryptocurrency trading and how the tax reform affected the cryptocurrency community. If you're a crypto trader, be sure to subscribe to our channel. We're going to release about a dozen more videos on cryptocurrency and the ramifications of such in the tax world and the best way to structure yourself in crypto trading. So thank you guys for watching. Be sure to subscribe, and we'll see you guys at the next video.
Wow, that was the best 2 minutes of your life. Hey, thanks for watching. Hopefully we were able to answer all your questions with our 2-minute tip. Be sure to subscribe by clicking the button below, and check out this video over here for our latest release and that playlist down there for our best playlist, and we'll see you guys at the next video.